Load shedding has returned. Energy and Electricity Minister Jose Ntsura says this is due to management problems. That's as planned maintenance has exceeded the agreed upon completion dates. To deal with this, Ramakgopa has stated that it's time for consequence management. Stage 2 load shedding was implemented yesterday and will continue until Thursday. Eskom says the situation will be reassessed daily. Disgruntled members of the United National Transport Union have overwhelmingly voted in favor of a strike at Transnet. This follows a wage dispute. Workers want a 1-year 10% increase, a 2,500 Rand housing allowance, and a medical allowance of the same amount. They're also demanding the removal of a cap on overtime. Transnet has proposed a 3-year agreement that includes a 6.5% hike for year 1 and 2 and a 5.5% rise in the 3rd year. The Commission for Conciliation, Mediation and Arbitration is currently working with both parties to try to reach an agreement, but Untu says should the CCMA process fail, it now has the mandate from its members to issue Transnet with a notice of industrial action. Untu is one of the largest unions at Transnet, boasting over 26,000 members. A strike could disrupt port operations at a time when the government is trying to turn around the cash-strapped state-owned rail and ports operator. Dipula has reported a 4.2% rise in interim distributable earnings per share and says it's on track to meet full-year guidance of between 4 and 6%. That's as the group has noted a recovery in the office sector and continued stability in its retail and industrial portfolios. A dividend of 25.6 cents per share has been declared. ENX has had a difficult half year. The industrial group has posted a 29% decline in interim headline earnings per share from continuing operations. That's as its power division took strain due to lower demand as load shedding reduced significantly during the period. Looking ahead, the firm says its strategy is to increase shareholder value by growing its underlying businesses and to evaluate the strategic disposal of those units at the right time. Investec is seeking a license to trade electricity. That's as the financial services provider looks to power its Johannesburg headquarters with solar power. The firm plans to buy power from Ilikwa solar PV facility and then sell and supply power to its office in Sandton. The trading activities will be conducted over Eskom's transmission and distribution networks. Further afield, Tesla is set to begin shipping components from China to the US for production of its cybercab and semi-trucks by month end, following a truce between the US and China on tariffs. Let's take a look for more detail.
Tesla reportedly plans to start shipping components from China to the US for the production of its cybercab and semi-trucks from the end of this month. That's according to a person with direct knowledge of the situation, and comes after the US and China reached a truce over tariffs. The move is being reported by Reuters for the first time and illustrates how the de-escalation of the trade war is having an immediate impact on business activity. Reuters reported last month that Tesla had suspended plans to ship the components after Donald Trump raised tariffs on Chinese goods to 145%, with the move potentially disrupting Tesla's plan to start mass production of the much-anticipated models. The truce announced on Monday saw the US and China agree to roll back the bulk of tariffs and other countermeasures. The source, however, added that the situation could still change. They cited the Trump administration's unpredictability. Tesla did not immediately respond to a request for comment. Reuters previously reported that Tesla aims to start trial production of the two models in October and mass production in 2026. With the Cybertruck to be produced in Texas and the Semi in Nevada. Trump's tariffs were meant to boost US manufacturing, but they hurt his political ally, Tesla CEO Elon Musk. He repeatedly voiced his support for free trade and objections to tariffs. Last month, Musk told analysts on a first-quarter earnings call that he pushed Trump for lower tariffs.
And Apple's iPhone 16 models are being discounted by up to $351 on Chinese e-commerce platforms to stimulate sales, following a decline in shipments in China, a crucial market for the tech giant. Here's more detail in this report.
Chinese e-commerce platforms are offering discounts of up to $351 on Apple's latest iPhone 16 models. It's in an effort to spur sales after first quarter shipments by the US tech giant fell further in its second largest market. The step comes as Chinese online retailers increasingly vie for cost-conscious consumers in a slowing economy. The price cuts are taking centre stage ahead of the annual 618 shopping festival on June the 18th, one of the country's largest. JD.com is one retailer selling the iPhone 16 Pro at a knockdown price, as is Alibaba. Reuters was unable to ascertain if the discounts were being offered by Apple itself or the platforms. Selective discounting has featured in the company's China pricing strategy. The US tech giant's smartphone shipments in China dropped 9% in the first quarter, while domestic competitors Xiaomi and Huawei posted gains of 40% and 10% respectively. Smartphones are among the key targets of China's broader consumption stimulus plan, with local governments in major cities offering subsidies of up to 500 yuan, or around $70 for some handsets.